All right, guys, I am back again with another video. And in today's video, I want to talk to you about gold futures. I'm going to break it down using Ichimoku analysis. And I'm going to give you also a tool that's going to help you to find Ichimoku targets. So you'll be able to understand where your target zones are for when you get into a trade and you want to know where to take your profit. So I'm going to give you the tool. I'm going to show you how to use it, and we'll be doing that today. So let's get started with this. I know you might like this one, so just watch this whole video. And also, guys, if you do enjoy my content, please do give me a like, subscribe to the channel, and click that notification button so that you will know when I put out more relevant content pertaining to anything that you want to hear about. All right, guys, so let's get started with this. So always before I get started, I like to give you guys a word of encouragement and something from the Lord, from the good book. And this is going to be coming from Matthew chapter 7, verses 3 through 5, which says, "Why do you look at the speck of sawdust in your brother's eye and pay no attention to the plank in your own eye? How can you say to your brother, 'Let me take the speck out of your eye,' when all the time there's a plank in your own eye? You hypocrite. First take the plank out of your own eye, and then you will see clearly to remove the speck from your brother's eye." So what this is about, this is Jesus reminding us that we often pass judgment on others before examining ourselves. This is wrong and hypocritically wrong in God's eyes. How can we address someone else's problems, weaknesses, sins, and inconsistencies, which is the speck in their eye, when we have not addressed our own, which is the plank in our eye? So if we can address our own problems, our weaknesses, our sins, and our inconsistencies, then we should be more understanding and more sensitive towards people with similar problems. In this way, we can be lovingly and humbly when we try to help others with their problems. God bless you, my brothers and sisters. All right, guys, so I want to start on the daily time frame with this gold futures analysis. And using Ichimoku, we're going to talk a little bit about the wave formations. We're going to talk a little bit about the structure. And then we're going to also talk about targets. So as you can see clearly on my chart right now, let me get rid of something here. You can see these levels right here. All right, so these are these daily time frame Ichimoku observation levels. All right, these are our price levels, which is our NT value, our V value, our N value, and our E value. So what we're looking at, first of all, we need to understand the structure of the market. So to understand the structure of the market, you have to know, basically, I use fractals to understand the structure of the market, but you want to see the market breaking either highs or lows. So breaking fractal highs or breaking fractal lows to understand the direction of the market. So as we look at this market moving to the upside, if I don't have fractals on my chart, so I'm going to take these fractals off, it's going to be a little bit harder because you're not going to see the structure as clearly. So the fractals help you to see the structure clearly. So what we have here is, first, we have this break right here. This is going to be, actually we have this right here, which is going to be your change of character. And I'm not going to get deep into the change of character, but it is what it is. It just is it's the market changing its character. So the market has three characters. Its character is ranging, trending up, or trending down. This character right now is trending down. Why? Because we're breaking previous structure lows. So we're breaking these fractal lows. So you will break this low and continue lower. You break this low, you continue lower, and then you break this low and continue lower. But in this point, and this is how you can spot a turnaround a lot of times, you could see we had basically a triple bottom down here. All right. And the market failed to violate this structure level. So just as it was breaking these previous structure levels, as it was here, it would need to do the same thing here to continue the trend to the downside. Since it did not break the structure level at this point, then we start to see what structure is it going to break, because there's two types of structure when you're talking about identifying the market. There's going to be bear and bull structure, and they're based off of bearish and bullish fractal levels, or bearish swing highs and bullish swing highs. All right, so the fractals will help you to see it more, or see it clearly. So I'm going to put the fractals on the chart so you can see it more clearly. So now these fractals are going to be the lowest fractal points where we're looking at the market breaking. So just as I said the market was breaking bear structure, which is this fractal low right here, and then it moved down to this fractal low right here, and then now where we are, right, currently where we're sitting, it's failing to break that level. So if it's going to change into if it's going to change its character from trending to the downside to either ranging or trending to the upside, it needs to break structure. And that first structural break is going to be your change of character, which would be right here. You can see it with this fractal right here. This is the first fractal break in this direction. All right, so you could see right here. And then the market finally breaks bull structure as it continues higher, breaking structure here and failing to break that structure, breaking structure here. We'll call this one higher than that, so that's the highest one. All right, so it broke this level and continued higher, and then it broke this structure over here. But in the process, the market again changed structure. All right, so we had a change of character right here, which means now we were expecting this to be a bearish market. So in order for this to be a bearish market, first we have the signs, which is a change of character. That's a sign that this could be taking place. And then you finally have a break of structure, which would be this low fractal. Not this fractal, because that wasn't like a swing low point. This would be your fractal low right here, where you would say this would be the change of character. So now if it can violate this level, then we know that the market is more than likely going to go to the downside and continue moving to the downside. Or else, like if it doesn't break this structure, it could range in this area. But in this case, what happened was we had a change of character, and then we had the break of structure level that was not violated. It did not violate. So what happened now, we had another change of character right here. All right, and now that shows us that we're back in the trend to the upside. Let us know that this was just a correction. We're back in the upside move here. So now that we're in the upside move, we're going to start to think about trading to the upside, how we're going to find our targets and so forth, and how we're going to find our trade levels, everything. So this gives you your bias, your longer term bias. You understand which direction the market is going. Also, Ichimoku is helping you with that with your cloud. All right, so you can also see, like on your cloud where you have your twist, this is basically your change day. All right, and you can see on this change day right here that the market did change. It started moving to the upside. So a change it doesn't have to be a change to the upside or downside. It could be a change where we have more momentum in the market, so we get a bigger move. So that would be a change day here. There was a change day right here on this area right here, and you can see the market pushed higher as we broke here. Then the market pushed to the downside. We had a change day here, and always given 1 to 2 day differences. This is our change day that we're going to be looking for the market to probably reach the high or maybe reach a low, depending on what we're looking at here, and we'll get into more analysis. All right, but these change days are going to be vital for you to be able to understand where the market may change its structure, as far as actually not even change its structure. It could be just a correction. It could be just a more volatile, a move with more momentum and so forth. It doesn't have to be, oh, it's going to go from up to down, down to up, and so forth like that. That's not the change. It's the change in momentum. It's the change in direction, anything like that. All right, and it could also be the change in character. But that's the way, looking at Ichimoku, that you can look at those target dates, and then now we're looking at our levels. All right, so now what we're going to look at here is basically, first let's start off understanding. We already stood the structure of the market. Now let's understand the directional structure, right? When we look at overall the N waves, our wave structure. So we talked about the structure with the bias of the market. We're going to talk about our structure with waves. So when I looked at this, the market moves in N waves, and I'll prove that to you shortly. But this would be an I wave. This would be a V wave, and then we would shoot for our N wave. And our N waves are going to be these daily levels. So currently we hit this NT level, this NT value, and we're failing to get through that. Then if we did get through that, we would look for our next value at the V value, and then the next one at the N value. That's the 1-to-1 value. That's the more likely level that you see the market move to, is that 1-to-1 level. And then if the market's going to be really strong, it's going to push right on up to this E level. So now when we look at the market, anything we do, daily time frame, lower time frame, or anything, we already have target levels that we're going to be looking for already to look at for this market to move to. So what I'm saying now is that either when we get through this NT value, we could see a move to the upside, reaching up to this V value and NT and this N value. And this could take a few days or so forth. And also where we are now, we could also start to range a little bit, but overall, that's what we're going to look for. So let me talk about lower now. So the market moves in N waves. So this is the bigger N wave structure. I'm going to break this off and show you the next structure and how we are and where we are. So let's just do this. This first structure of wave is going to be here. It goes N wave here, goes here, goes back down here, and goes to this level. This is the N wave. See that wave? It's an N wave right to the upside. All right. And so with this move, we already should know where our level is, because what we would look for now is to add our target. So this is a little hard to explain right here on this one because of the way it moved. I'll show you a better way on the overall. So when we look here, we go from 1. Let me mark this. We go from 0.1, 2, and then this was 3 because we didn't go any lower than that. All right, so this was the move higher, the correction, and then the move higher, which gave us that. So then this was the 4. So we would have been shooting for one of these values on this wave. These values come from the bigger wave I previously just showed you. Let me show you which one I'm talking about so you understand. Those values, these values here, come from this wave structure. All right, so this is the bigger wave structure. That's where these values come from. So we're saying we're going to get either here, here, or here, or the E level, which is above. That's where these come from. But there's internal structure, wave structure, that gives us lower levels, other levels that we could shoot for. And that starts coming from this right here. So if we would have marked this level and then look for where the target would be. So suppose we got here, we saw the move, then the correction, and we tried to get into a trade. Let's say we got into a trade. Let me remove that. Let's say we got into a trade right at this level right here. Let's say we're going to get in a trade when the market violates this high. All right, because we look at this as the move higher, a little correction, bounce off the cloud here, and we stayed above Tinkins and Keynesian, so we're going to take an entry right here. Well, then we would look for our target. We would know where our target is. How we would know where our target is with our N value. Our observation theory. And I'm getting ready to show you how to use this observation theory, how you can get it. So basically, I'm going to go into my indicators, and I'm going to go into my scripts, and I'm going to go Ichimoku, and I'm going to go Ichimoku price observation levels, and then I'm going to mark them. I'm going to show you how I'm marking them. So this is the first wave structure that I'm marking. This goes from here to here and then to here again, like we just said. So that's the mark, and then you mark the levels that you just did. You say here, here, and here. You click that, and then you click where you want it to show out to. And so I'm gonna bring it over to here. So here it is on my chart now. And I'll show you again, and I'll show you how to do it and get it. So now I'm looking at the structure. When I got into this trade that we just talked about, if I got into that trade, I took this trade, and where will my targets be? So here's where my targets would be. This is the lower time frame, the lower structure targets. One would be at this level, because you could see the V right here. See the V? And I can move those over or anywhere else. And then the other would be, this was my NT level right here. All right, see the NT right there? And this would be my N level right here. That's the 1-to-1 ratio. That's the one we usually shoot for. That would be right there. And then this E would be right here. So when we took this trade, as we said, so remember we're saying we're going to take this trade based off of the market moving higher, correcting, finding support at the cloud. We take the break. Now where are our targets? Well, there's your first target, this NT level right here, which is this V level right here, which is this, actually this one right here. And then you have your N level, which is right here. And you could see where we are. We just missed this N level, but we did violate the V level, and now we know where our profit would be. All right, so we would have taken profit up in this area. All right, but now we're past that point. All right, so let me show you where we are now. We're past that point. We're looking at other things. So we want to take this off of our chart now so I can show you. So let's take this off. So when you look for this, look for ABC _ calculator, and then you'll find this. I changed the name for myself and where I'm going to put this. But this is from, it doesn't have it listed on here. But anyway, just look for ABC calculator and TradingView, and you'll be able to start using this. And if you have any issues, just refer back to this video. So I'm going to delete that, and then I'm going to bring it back, but I'm going to show you where the structure is now. So there's twofold structure here we're going to look at. We're going to look at now. So we said the market was moving in this structure right here. 1, 2, 3, 4, right? But now we're going to look at a little bit bigger structure and see where the targets are, okay? Because now we're going to show you exactly where we would be shooting for on this time frame here, which is the daily. We already marked our higher structure levels. Let's remove these. We don't need these on the chart. And remove that. Right? So these are the bigger structure levels that we're going to be shooting for. But then again, there's structure here, right? So watch this. There's a wave here. And so now, where are we going to move to? Because now we could say the market bounced off of this level here. I'm going to mark this level. So the market bounced off of this level. When it bounced off of this level, we're looking for our target. We're shooting from 1, 2. I'm always taking trades at the 3 level. This would be 3, and then we're shooting for 4. Let's see where 4 is. So again, we're going to use our values. All right, so now we can mark those, and I'll show you now a little bit easier how it looks now because we have more defined movement here. You could see it. So now you take you go back. I named this Ichimoku price observation levels for myself, but again, it's the ABC calculator. So now I'm going to go from this level, which is this 1, go up to this 2 high, and then go to this 3 low, and now mark the vertical axis of these levels, and then you can move to show where you want those to show, and you click it. So now, when we take a trade, say we took a trade at this level, even if we decide to take a break at this level right here, now we know where our targets are going to be. So we would now be looking for, so let's draw this out so you understand. Now we're looking for the market move from here to here, and then it corrected at 3. And then now we're looking for it to move to 4. 4 could be any of these values that we just showed on it, that we just made. All right. And some of those values come with our bigger term value. But when you look at that, you could see where we could either move up to this N level, this NT level. We can move up to this V level. We can move up into this NT level. I'm sorry, this N level. This is the NT level. And then we can move up to this E level. And those would be the targets from this move, because that would make this a full N wave, which I'm talking about the market being this. Let me show you real quick. I'm talking about this being a full N wave. The market moves in N waves. I'm not going to go through the whole market to show you that it moves in N waves, but it moves in other types of waves. But mainly when it's trending, it moves in N waves, right? Where is my tool here again? So again, we would be moving 1, 2, 3, and this would be, if we said we're going to hit this N level right here, which is right there, then that would be a 1-to-1 measured move, which makes this a big N wave. This is the most sought after target. So that's where we would look for the market to get to. You always have to break this level though. This is like a break of structure level that you need to get through. All right. So again, we had a change of character here. We have a break of structure here. If we continue, that lets us know we're moving higher, and then we're going to move up into this N level. If we can't violate this level where we are right now, right here, we need to violate this high right here. So let me move this. We need to violate this high. Usually if you don't violate that high, what starts to happen is the market either going to range in some kind of other formation. So therefore it breaks away from the N wave, but overall the N wave starts to come back again. I'm going to just show you how it could break structure. So it goes from this high to this high, to this high, to this low, to this high, to this low, to this high, to this low, this high, which then makes this a P wave. All right, and then eventually the market could break back to the upside, which then now turns it back into the N wave. All right, so there's a lot to that. We're not getting deeper on that right now, but that's how the structure of the market is. So the N wave is the movement wave, the wave of the market movement higher or lower, and the P wave and Y wave are waves where the market is contained. All right, it's not moving higher or lower, it's just in a range. All right, so that's what we got there. So now you see where the targets are if we take a trade anywhere on the daily time frame here. But since we're scalping, we're going to leave these levels on our chart, and we're going to go down to the lower time frame, the 2-minute time frame. We're going to break it down there. All right, so the 2-minute time frame, now I know that more than likely we're looking at the market moving to the upside, right? So we're saying, oh, the market's going to, we're saying the market's going to be moving to the upside. So let's get this all set up. So what I look at on this lower time frame is, you could still see we have our levels where we're looking for the market to move to, right? So we could still see our overall bigger levels where we're thinking this market's going to eventually get to. And you can see these levels. So this would be that internal wave structure. I believe this would be the NT level of that internal structure. This is the daily NT level, along with, I believe that's it right there. This would be that internal structure V level. I know the levels because of the color, because this is the daily V level. I didn't mark these levels. These were done with the tool. Let's see if it's showing. Yeah, see? So you can see this is going to be that internal NT value, the internal V value, and the internal N value. But the overall bigger N wave is going to be these with the values on the right. So this NT value, this V value, N value, and this E value way up here. Eventually the market gets up to that point. That's longer term. That could be days. All right. But those are targets where you would look for. And nothing's going to be always 100% guaranteed, but it just gives you something to shoot for, just like a support and resistance level. All right. And also it gives you that target. You can also use these when you see the market get to these levels, that it may correct at these levels. All right. So these are going to be vital levels for you to pay attention to. And I just showed you how to use them. I told you the tool, how to find it. It's on TradingView. So now what I'm looking at on this lower time frame is basically, we haven't said a lot about our 5 lines, or the cloud, or Tenkan-sen Kinsen, because we're talking more about structure. Structure is all Ichimoku, but structure is not just Ichimoku. Structure is overall everything. You don't look at the market without understanding the structure. And Ichimoku is not going to give you the structure just by looking at the wave, the cloud and so forth. It'll give you the main structure, and it could help you if you really understand. But now you can see the market flattened out here. So what do you think this is? This is, right? So at this point, what's happening here is the market flattened out. All right, so what I'm looking at is now, when we talk about structure, we also talk about Wyckoff schematic. All right, so when you talk about Wyckoff schematic, the market moves in 3 phases: accumulation, markup, and then distribution. Then it could be markdown, accumulation, or else it could be accumulation, markup, accumulation, markup. All right, or else it could be distribution, markdown, distribution, markdown. But we're going to look at this structure where we are now. At this point, we had a nice run to the downside. Finally, we're flattening out here, which means we're probably finding this is accumulation right here. All right, so what happens is you could see basically, let me get this. This is going to be our primary support. Now, I don't have my volume bars on here, but basically what we're seeing here is the first real last level of support here, where we see the market fail, stops right here, and then we're going to see our secondary. We're going to see our selling climax right here. So this is going to be our primary support. This is going to be our selling climax, which then created this level down here. When we had this selling climax, which you could see usually with big volume bars. Let me bring the volume on here because I need to show you that to make sure you understand that. So I'm just going to click on volume and put that in. So now we put that volume in. So I talk about where that major volume is taking place, and that's all in this area here. So when you have a major big candle like this, and I'm calling this the selling climax because we can for sure see that it was now, but when you see big candles like this, don't ever take a trade on a major big candle that has a giant volume bar. Usually it's not all what it perceives to be. A lot of times these institutional traders have to buy to sell or sell to buy. And also when they get to these levels, this is not all selling. All right. So you could, if it was all selling, then you would have closed on your lower half right here. But instead you're more to your midpoint on this bar with all this volume. With all that type of volume, you should have been down here. Look at this bar, which is this one. There was an issue with this bar, but this bar, look how big this bar is, and look where it closed, and look at the size of the volume. Well, this was even bigger, so you would expect an even bigger bar with a better close, but you didn't get that. So in this place, the market failed right here, flattened out, and then you could see we came back up. We found this resistance level, which is now going to be support. So I believe we're in phase B because I didn't see a spring here. So what the spring is basically going to be liquidity grabs that everyone talks about. I don't see a spring here at all. I'm not calling that a spring. So I'm thinking we're in phase 2 before we even start to see the market move higher. So we're probably going to be in this area for a little bit more time, probably come back and test this area. We may see a break lower and then the move back higher, and then finally break this upper level, and then we start to see the market move to the upside. We'll see that change. So Ichimoku was flattened out. You see, the main thing to understand here is, so let's draw this. This was going to be our automatic rally level. I'm going to put a support right here, a resistance level right there. So we got a support and resistance. You can see we're flat. And the one thing to understand is we're not going anywhere until Chiku span right here breaks above one of these levels. So either it's going to break above this level or break below this level here. So that's what I'm looking at right now. And we could still see downside because based on our daily, let's go back to it really quick, then I'll get out of your way. Based on the daily, I'm again saying that, yes, we did find support here. So we're at the 1, 2, 3, and then we started to move off of the support. We really need to break this level, and it looks like we did, and we need to stay above it. So in order for this to really move, we do need to break this. And I'm going to mark this so we could see where this is on the chart. Let's mark this so we could see where this high is. We really need to get above this. I'm going to mark that as a black. And then we're going to look at that on a day. So we need to get through that level. That's going to be very important to get through there. Then we could start shooting for these targets. If not, we could be in some kind of a range for a little bit here. And I don't see the market going lower than this level. All right. But we could go lower than our level that we're talking about now, because here we are. And we did, this is going to be, again, a break of structure level to continue the move to the upside. Let's go back to the 2-minute real quick. And then I'm done. I want to see where that level is that we really need to get through. And that's going to be way over here. All right, so that's going to be a daily time frame level that we really need to see the market get through. This lower structure level, we just need to get out of this box and then start moving to the upside. And then if we come back and correct, we need to correct on this box. Now you may see the market break out and then come back through here and then push higher. That could be your spring at that point. But the way I'm looking at the market, everything that we see, I'm looking for more upside on this gold futures. And I have my market levels. So tomorrow's trading could take us up into this higher area here. It all depends. You can see we reached this area from Friday. We closed all the way down here. Again, you can move back up into this area in one day. This would be the level that we would be shooting for. So we're looking at this as support here, maybe targets up here for the daily time frame. Not the daily time frame, but the overall daily market level. We're looking for that to end up in this area sometime tomorrow. So that would be something that we look for. So that's a little bit of Ichimoku analysis, but not so much with the Tengen-sen, Kijun-sen, and so forth, where people give you that basic analysis with Ichimoku. I wanted to give you a little bit more in-depth wave analysis along with your time analysis and levels that you can shoot for. And now you also see the indicator and able to use that. So guys, if you do like this content, please don't leave me hanging out here. Please let me know that you like this content. Give me a thumbs up, comment. Anything you ask me, I'll try to get back to you. I've been trying to answer all my comments, so please do comment if you do find something that you do want to ask me about, and I'll try to get back to you eventually. But guys, hope you enjoyed this content, and till next time, guys, have a great one. God bless. So long.